The weather outside is frightful, and the time is soon delightful. Why am I in airplane mode? I don't know, I don't know, I don't know. Where is my YouTube? Okay. I don't know why I'm not on Do Not Disturb here. Good morning. Thumbs up, Zephyr. Thumbs up. Okay. Let's see. Let's go to TrendSpider. It's 60% off for this week. And I am going to post a link and pin it. Let it snow, let it snow, let it snow. Copy. Paste. And then, let's see. TrendSpider is now 60% off. And then we'll post that. And then I think I can pin this. Pin. Boom, 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 boom. Let it snow, let it snow, let it snow. Let's look at, I think I'm going to look at the energy stocks. And, oh, come on. Copy, paste, and LNG. We're going to look at LNG as well. Okay, by the way, Goldman Sachs. Let me put this down. Goldman Sachs out with a prediction that bear market sticks around. That bear market sticks around until 2023. Who believes in that? Okay. I got my Active Trader Pro up. And you know what I'm going to look at? On there, I'm going to... my old buddy Boyle. Look at Boyle up 5% in the pre-market. Look at our friend Boyle. We're going to go back to the Safari view. And what I'm going to do... Oh, that was the chat. So, by the way, for anybody that got TrendSpider and needs my algorithm, let me know. I've probably done a fairly poor job in following up with people. I've had a busy weekend. There will be no podcast tomorrow. I'm going to drive up to New Jersey. But, so there was a subscriber who I got the algorithm for and kind of helped him put it in. And then he went up here and he changed the candles to Heiken Ashi. He was watching TrendSpider's videos, and he changed it to Heiken Ashi. And I'll just tell you, I mean, let's go to Apple. So we'll go to Apple. Now, when you run the algorithm on Apple, over 1,000 candles, the algorithm makes you 36%. Buying and holding makes you 31%. Now, here's the thing. Heiken Ashi is a candle that does things a little differently. When you back test on Hike and Ashy, the actual, I've got to change it to in the actual algorithm. But it changes when I look at Hike, and I'll just show you the Hike and Ashy candles. TrendSpider is an overwhelming platform. Morning, Chris. Morning, James. It is it's a candle. You'll have to kind of read up on how to understand it, but I have read up on it. It's an unbelievable candle. Again, TrendSpider, you have hollow candles, Raindrop, Hike, and Ashy. I typically use bars for the algorithm, but when you switch to Hike and Ashy, that 36% that the algorithm makes you, even though the buying and holding of the asset remains the same at 31%, the 36% that the algorithm gets you on bars under Hike and Ashy, that goes to like 6,000%. It is a crazy, crazy percentage. And when we were first setting up the algorithm, Steve and I thought, holy shit, we found the Holy Grail. Morning, Jeff. And essentially, we were doing that. Well, it's funny, and it brought back, actually, it made me feel really good because the person who found that used my algorithm, was digging around in TrendSpider, learning how to use it, learning how to backtest, learning new strategies, blah, blah, blah. And he said, hey, I found this one. Oh, my God, it's a killer. And I said, we didn't. And so I sent him Jason from TrendSpider. I think it was way back in 2020. We had a chat back and forth with Jason from TrendSpider. And we were like, we think we found the Holy Grail. And Jason was like, I hate to burst your bubble, but there's been about 20 people even before you guys that thought they found the Holy Grail. But the way we calculate Hike and Ashy candles, it just doesn't work that way. So kudos to everybody who got TrendSpider. You can still get TrendSpider. It is 60% off. The link is in the description. When I start the podcast, I will talk about my relationship with TrendSpider. I had a call with them last week. So, morning, Jesse. I'm going to be expanding my relationship with them, sounds like. They're kind of happy, but other thing I'm going to bring up on the podcast is I've been getting guest requests. So you guys who are the hardcores on YouTube Live, should answer below. I'll probably start a poll on the socials, maybe in the Facebook private group, because those are the hardcore folks. I think we've got about 50 people, 60 people in there now. And again, getting you guys to change platforms is like fucking pulling teeth. But should I invite guests on? One, let me see. I got an email early this morning, and I'm not sure. The degenerates. I'm not sure if this guy is worthy of it or what. He's probably got as many socials, like on the socials, as I do. But like I said, I get 5,000 listeners on the podcast. Getting anybody to come over to a different platform is like pulling teeth. But he is a certified financial planner, a 3-time #1 best-selling author, the owner of Lake Growth Financial Services in Chicago, and co-host of the Not Your Average Financial podcast. His agent reached out to me. Full disclosure, I don't have an agent, but his agent reached out to me and asked if he could come on the podcast. I don't know how that would do. I mean, I do a podcast with Rick, the political podcast, but that's a little different. And by the way, I have no fucking clue what I'm talking about on that podcast. I'm just an everyday Joe who kind of has his opinions on politics, and it's fairly balanced, but maybe it's, a little bit off topic. But anybody buy Disney? That's the canary in the coal mine this morning. I'll talk about it on the podcast, but Is this the end? Oh, we have a cross up. UNH and Verizon. And Verizon. And we talked about Verizon having a cross up. I know I did. But if you got Disney under 100, kudos and high fives. And American Eagle Outfitters is up 1% again. There is nothing in my brokerage that has a MACD cross up. Let's see in the watch list. HST. This is Host Hotels. I like it. Travel. We'll look at that chart. Chart's a good one. It just crossed up the 200-day. If you guys aren't on the socials, no, don't sell it. Yeah, Verizon and UNH, don't sell either. Those are two that, in my mind, I think you could hold through recession and be perfectly fine with. Hark Holdings, all. LHX. Stone Company. Ooh, look at the ascending triangle. Boy, that's an interesting one. Do we believe in this? STNE. They're not making money, but their forward PE is 4. Price to sales is only 0.31, so they're close to making money. The most recent downgrade to $7.80, but they're trading at 11. They had earnings. Let me see. Jim fucking Cramer. By the way, I'll bring this up. I'll look at Netflix. Is the inverse Cramer turning? Jim Cramer on Friday. I have it in my notes, and I posted this on my socials. I have a note that says Jim Cramer said on Friday he thinks Nelson Peltz, an activist investor, is taking a stake in Disney. Cramer is usually wrong about this. Does this have some backing, and could this be bullish? I was going to talk about that this morning, and then Bob Iger comes in and replaces him as the Bob Chapek. I have friends who work at Disney. My one friend who I built the algorithm with, Steven Orlando, who worked at Disney. He wasn't anybody big. He was just one of the park workers. And I don't mean that as a downgrade or an insult to him. He is like me. He doesn't need to work, and decided he wanted to stock shelves overnight at Disney because he loved the company. He wound up leaving because he didn't like Chapek. And he had the ability to leave. So now he works for Tesla. I think I've talked about him before. Let's see. We're going to go NASDAQ 100. I don't see anything. I don't like that S. What's SLG? See, it's up 6%. See, it's under the 200-day. No. ARCs are, I'm still holding the ARC funds that I own. And the whole reason I'm holding them is because tax reasons. Maybe the financial planner could come on and discuss my taxes and whether I have a good tax strategy or not. If you didn't see, I was at the Falcons game yesterday, and there was a guy sitting next to me. I'll put in Netflix for you. Netflix for Zephan. S&P 100. I sat next to a finance planner. He says, "What are your top 5 stocks?" I said, "Oh, top 5? Apple." He says, "No, at 5. I said, "Yeah, Apple. All 5 spots." I did tell him. I said Apple. I said Google. Energy is a tough one today, and I'll talk about it. Traditionally, I read an article that looked back at oil prices. And this week, oil prices traditionally are just down. So, okay, I'm going to go back to the strategy tester. Boy, that one's interesting. Anything in the pre-market in my portfolio that sticks out? Nope. Anything crashing? Not really. Ethereum. BABA is. Let's look at BABA real quick. Hasn't lost the confirmation. It's down, but it hasn't lost its confirmation. It's got that little button hook there. There is a gap here. Could go down to 73. Look at the RSI. That's why. Look at the MACD. It's got a crossover. It's got to come back down. Come back down from that stratosphere. Let's drag this. Hey, and you guys should be proud of me. I'm doing actual preparation versus just coming on and looking at stuff. Even though me coming on and looking at stuff has done well for the podcast. HSY. I think, Jesse, you were the one. Hey, Jesse, by the way, I posted on my Twitter. I'll send it over to you. Steve Burns put out a ledger, a stock ledger, where you can journal your stock trades. But I don't know, Jesse, if you brought this one up, but HSY Hershey's, it had the cross up at 224. Remember we talked about how it got under that 200-day, and every time it gets under that 200-day, it seems to go right back up. Historically. Now, it's pretty expensive here, but it's a well-run company. Let's see, HSY. I'm going to keep it in there because I did get an alert. That's a great thing about TrendSpider, man. By the way, I was like a girl getting out by her dream guy to prom in high school when I was talking to them on Friday. I couldn't speak more good things. 235 is the price target. See, here's the thing. Hershey's, look at their 2022. It goes all the way back to here. So your price target 196, 215, 225, there's nothing up above like 238. You're trading at 225. It got all the way up to 241. So you're only 6% below your 52-week high. 16% year to date. This is greatly. Tesla, I told everybody, Tesla, I was screaming at the Falcon Stadium. The second people understand that you're in stocks, man, all they want to do is talk to you. If you guys are ever in a bar and you want to strike up conversation with anybody, just say you host a podcast. Look, cross down. I'll put that in. Tesla. Still dropping. Algo got you out with an 8% loss. I didn't think that 195. I mean, you could have sold the 195 above 200 there. Remember, I've got from here, around here, right before here, right here, I sold 50% of my Tesla. Okay, this was around July 18th, right before their earnings. I just didn't believe it. It soared up. I missed that. But I had a significantly lower price purchase. So I got that. And let's bring this back to the recent highs in April. And you have to go way back, by the way, to get that volume shelf to really work. But I haven't put in my 50% yet. The 50% I took out, I just haven't felt comfortable putting it back in. The main reason is because Elon's still selling his stock to buy Twitter. Yeah. Yeah. People also spend money on OnlyFans. I had some girl, who was it? Some girl was talking to me about OnlyFans a few weeks ago. She goes, you should go on there and do your stock charts. People do that kind of thing. I guess OnlyFans is not just like, what we all think it is. It's actually, there's quite a few people, and this is what she was talking to me about, is she does meal plans. She's a nutritionist. And she does meal plans on OnlyFans because it was a good way it made it easy for her to charge customers, to track customers, to post things that are private, that won't get shared, blah, blah, blah. So, yeah. Okay, let's open up the podcast. And I think I got everything worked out. Good morning. Good morning. Let's see, compressor. If I didn't mention it, I will mention it now. But attack. Why is attack? There we go. No podcast tomorrow. No YouTube live. You guys are going to have to go about your day without me. I'm going to be driving. I may pop on every now and then while I'm charging, but it's a long day. I think I'm going to take off tonight. Wow, Disney's up over 100. Okay, I think I got everything. I got Active Trader Pro. You won't miss me, man. I'm only entertaining in my own head. I think my mother yelled at me about that. She goes, who wants to listen to you? Some people do. So. Okay. Okay. I think it's getting hot in here. It's getting hot in here. Take off all your clothes. Nest. If you guys don't have a smart home, by the way, you're missing out. I have lights, thermostats, TV. Well, I should say TVs because they're on Apple TVs. TVs, garage door. I have not put a smart lock in. The reason I haven't put a smart lock in is because I never use my doors. So, my garage is what gets used. But if you guys haven't upgraded to a smart home, you need to. It is life-changing. I always joke with my friend about the word life-changing and stuff. I'm just looking over my notes. Okay. Good morning. It is Monday, November 21st. Before I forget, no podcast tomorrow. There may be one on Wednesday, but remember, it's Thanksgiving week. Not only am I driving to family Thanksgiving, but you guys should be spending more time with your families as well. So get away from me, get away from the podcast, get away from YouTube, get away from everything. This is a week about family, so go there. Big news. So Friday, if you're not on my socials, I posted that I had a quote. I had a note, I should say, in my. I use Apple Notes to take notes for all the episodes. And Jim Cramer, my note says Jim Cramer said on Friday that he thinks Nelson Peltz, who's an activist, is taking a stake in Disney. Cramer's usually wrong. He has been more wrong than he has been right. But since it had other backing, I thought Disney was going to be bullish. And so what happened over the weekend, specifically I think late last night, is that Disney, Jim Cramer has been screaming that Disney should fire their CEO, Bob Chapek. Well, they did, and they brought in the old guy, Bob Iger, who is beloved, by the way. When he was at Disney, he did some fairly significant buys. Marvel, the Star Wars stuff. He did a lot of spending. He also bought Fox, or some of the Fox assets into ESPN. They were expensive. They were not very well taken by the street. Bob got out. Chapek got pinned with all of that stuff. Chapek started the streaming service, but Bob had begun it. Chapek has been getting a lot of hits, so now the White Knight comes in and starts, cleaning stuff up. So Bob Iger is back in. Disney is up 10, 11, 20%. That's a big jump. But yeah, it's been up 10 to 11% today. I continue to say anything under 100, you buy this stock. Anything over 100, you can think about selling it whenever you want. Just don't sell it under 100. I don't care, how low it goes. This is a big boost for the stock in my mind, but we don't know the details. We don't know. Chapek could be getting $1 billion to walk out the door. Well, that's not going to be good for the stock. So we don't have the 8K. Have to wait for the 8K before I would say you buy it. But in my mind, if it dips under 100 and you can get it, I think this $95 price target that the algorithm got you out of, if you're watching on YouTube, you can see the chart. I think that's an indication that I think the floor is between 90 and 95. And I think if the stock goes down to that level, I think you're good buying that one. It's got a solid dividend. This company is expensive. But what about Disney isn't expensive? The PE is 52. If they start monetizing some of the things that they've done, you can see the multiple bottom here at about 91, 90. That's why I say 90 to 95. 5 years from now, are you going to know that you spent $5 more per share on this? Probably not. Probably not. So I think Disney is a buy here. I just don't know that today is your buy. Again, if it dips under 100 and you want to buy it, go ahead and buy it. Disney is one that I don't think that you can go wrong at. So that was the big news this morning. There also was some news. Well, I shouldn't say news, but oil over the weekend kind of dipped down under $80 a barrel. And this morning it's under $80 a barrel. I did some research into this, and it turns out that just Thanksgiving week is a dip in oil. So energy stocks will probably continue to go down this week. Let's look at some of the energy stocks that I personally own. Devon, I think I moved this one to under 65. Buy it over 65. You can sell it. It's got its ex-dividend date on December 9th. You can clearly see there was a button hook here, kind of continued down. The algorithm got you out on Friday with a 4% loss. So you'd be out of this one if you're listening to the algorithm. The algorithm makes you 42% buying, and holding makes you 387%. Your average win is 13% on this. Right now, the MACD is crossing down. The RSI is in no man's land at 44. You can clearly see right after earnings, the volume is just dying. It's not there. But this one has a very good dividend, so I'm holding on to it for the dividend X date. After the dividend X date, which is December 9th, we will be past the Russian oil sanctions from Europe, which happened on December 5th. You will be past Thanksgiving week, where typically oil and energy is in a downturn. So I do think that you have opportunities here in energy. You're just going to have to put up with this week. I haven't sold. I'm still holding on to that one. I still hold Oxy. Oxy is down 1% in the pre-market. Same kind of chart. Same ex-dividend date, December 9th. The MACD is crossing down. The RSI is right at about 45. You have no volume really here. There was no volume even on the pop. Buffett owns this one. You're still above the 200-day. I'm kind of sticking with it.
You covered all the gaps. You just haven't covered this one down to about 61. I would say that this one, anything under 70, probably get into this one. Buffett still holds it. He loves it. It is what it is. Exxon is the other one that I own. I own MPLX too. You're seeing the button hook on this one. You're past the ex-dividend date. The MACD's on its way down. I think if you're looking to sell this one, 112 on Exxon is close to a 52-week high. Let's look at the 52-week high. 52-week high is 114, so you're only 2% off your 52-week high. I tend to hold this one just because I think my average purchase price is like in the low 40s. So I'm holding on to it. Tom had from Twitter had instant messaged me about CHRD. This is Chord Energy Corporation. He was showing me some analysts that like this one more than they like Chevron. This one has been on a run as well. The algorithm had you buy in at 135. The MACD is crossing down. The RSI is at 47. I can see the button hook in this one. If you're holding it, I think there's a gap here between 138 and 140, probably in the crosshairs, because again, you're below that 50-day, so you're losing kind of some of the bullishness. You can see it's below that Bollinger Band right there. So you're kind of probably going to get pulled up a little bit, not much, but if energy is down this week, this one's going down too. You're past your ex-dividend date. I would probably wait for this one to get more towards the 200-day, which is more towards 137. I think you're going to get that. Again, if energy continues to go down, you're going to see it. So I wouldn't necessarily buy into this one now. It's been on this run. By the way, when I say stuff like that, shit goes up. So throw your money all into CHRD. But energy, again, we can look at Viper Energy, which has been one that I've talked about with a killer dividend. Got you out with a 15% dividend as of November 10th. You're past your ex-dividend date. You're seeing kind of the button hook there. I don't know that I'd necessarily buy into this one right now because, again, you're weak. Look at that MACD right there. The RSI's down. COP, ConocoPhillips, is one that I talk about a lot. And this is one, the algorithm got you out on Friday with a 20% gain. So you can clearly see that energy has run, and it's kind of button hooking. And they're all kind of doing the same thing. There's not much difference in this. CVX, which is the most widely held Dow stock on energy, it's button hooking. Hasn't gotten you out yet, but it's damn close. Probably get you out in the next couple of days because of the weaknesses. FANG, same thing. This is Diamondback Energy. You're seeing it cross down. Got you out with a 31% gain. There's a gap above this one. But you've clearly got weakness on the downside of the Bollinger Band. You've got this gap down here at 121 to 125. Not really in play since we're over the 200-day, but if it comes down closer to the 200-day and breaks that 200-day, that gap comes into play. You're past your ex-dividend date on this one. PXD, which is Pioneer Natural Resources. This one has exposure to natural gas. You've got an ascending triangle on this one. The algorithm did get you out with a 4% loss, but I think anything below, I would say this triangle shows you weakness as long as it breaks. If we close above $250 today, I think you may have another run in this one. You've got November 29th is your ex-dividend date. This one's a good one to just buy and hold if you're into energy. It's had a run. I mean, honestly, if you could have gotten it down here at 200, that would have been a great, great trade, but it's had its run. Another one that's had a killer run is LNG, Cheniere Energy. This one deals mainly in natural gas. We had a MACD cross up here at 166. You're only trading at 167. The MACD's down. The RSI's in no man's land. But comparatively speaking, look at Boyle. Look at our friend Boyle continuing to just kill it on a 5-minute chart today. It closed at 41.97, so say 42. It's up almost 10% at 45.66. So it continues to kill it on go towards that gap. If we were to look at Boyle on the algorithm. Again, Cheniere Energy, remember, this is a company that takes liquid natural gas, exports it in Louisiana, and then they put it on a ship and basically import it into Europe, where they're paying a significantly more amount for their natural gas. Now, if you look at LNG, it is expensive. It is super expensive. They're not making money. They probably will become profitable, but they give their money back in the form of dividends. They are up 65% year to date. Their 52-week high is 182. So they're 8% off their 52-week high. If we were to look at BOIL, and remember, BOIL is an ultra ETF, so it trades quickly. There's a gap here between 44 and 48, which is 44.40 and 45.20. So you're covering that in the pre-market today. The buy-in was at 42.23 on November 17th last week. You're continuing to see it above the 9-day, so you're moving. The MACD's kind of moving up. It's just a slow move up from this one. But in the past, these slow moves have turned into big moves like back in July. The RSI is kind of in no man's land, 53. So I think if you can get this one, again, today might be tough to get it down near that $42 price point, but 42 is probably your buy-in. If you get closer to the 200-day, which is at 66, I think you're going for that $87 to $95 gap that I've talked about above that 200-day. So as we get closer, might be an opportunity to buy in on some weakness. But BOIL is one that, again, we've talked about a lot. Goldman Sachs came out with a prediction, I think within the last half hour or so, that the bear market sticks around until 2023. My personal opinion, when we look at SPY, I'll take a look at SPY for you, just because this is an ETF that does the S&P 500. You had a buy-in here at 390. You're seeing the button hook. It's kind of coming in. This is a light trading week traditionally. We are going to look at some of the earnings that are coming out. I know Best Buy is coming out with earnings. There's a couple other ones. I think Zoom Video is coming out with earnings. But you've got a MACD cross down here that probably will get you out. See how it's a little bit high and it's crossing down. The moving averages just have to come in. The RSI is at 61, so it's kind of high when you look at this SPY chart. So I would expect that and on the 4-hour chart, you're above the 200-day. But a traditional kind of way to look at SPY is really on the daily, and you're still under the 200-day. You're using that 200-day as a resistance level, and that 200-day is at 405 on SPY. So when I say, yeah, it's up there on the MACD, the RSI is up there, we may be taking a break this week. That may be all this is. It may be another break and then another breakdown to 360 on the SPY might be happening, because look at these waves. You basically get that rise, you get that fall. You get that kind of capitulation, you get that rise, and then you get another bigger fall. So you're making lower lows and higher lows. So I'm sorry, just lower lows. But you're coming back. This is the trading range that we talked about. So I do think that you're kind of looking at that. Okay, I'm going to read you a note from an anonymous person on Instagram. Hi, I'd love your thoughts. Let me preface this by saying I'm a total rookie, aren't we all? And trading is a huge learning curve for me. And I do have to come out with my book, by the way. I decided this weekend I'm going to work on it over the holidays. I don't have time during the day, all day, to sit and watch the stocks, but I try and peek in a few times a day. Again, that's a key sentence. Who has freaking time? I have time because I don't work, but I don't expect everybody to have time. When you only have a couple of hours a day to peek in, I will, kind of another sales job. The algorithm uses 4-hour charts. Excuse me while I take a drink. But the algorithm uses 4-hour charts. And so twice a day you get texts. If you spend, an hour a night, even 30 minutes a night, going over your alerts, going over the hardest part about TrendSpider is setting it up. Then it's on autopilot. And so that's the key point. If you've got a job and you don't have time to look in, that's perfect. Back to the note. I'm just getting my feet wet, so I put a couple $1,000 in a while back into an account and just left it. They traded Boyle and TQQQ, which is huge. So she was thanking me. Knowledge is power, and you're absolutely empowering me to do more financially aware and become more responsible. God, I love that. My question is this. I'm in ISRG and PENN. They are both down. It's not a huge chunk of money, but I'm considering getting out of both and cutting my losses and trying to go back in another stock like Macy's or TSM. If you're busy and can't get back to me, I'm never too busy for you guys. I totally understand. You have time to share your thoughts. I'd love to hear it. Appreciate it. So let's go over these two. So ISRG. I don't even know this company. I thought it was Intuitive Surgical. This was I believe it was an ARC stock, but it's been on its way down. This has very promising. I know enough about it to know it was super, super promising. You have had that fall from grace back in January where you were trading at about 350. You've gone down to 200. From the 200s, you're back up at 262. Right now, the algorithm has you in on a trade from 195 up to 262. It is filled with gaps. So 222 to 226, 240 to 247. But the algorithm hasn't gotten you out because this one continues to rise. It's past its earnings. Looks like the last earnings date, 119. Let's see, ISRG. Let's look at their PE is 69. So it's fairly expensive, but for healthcare, not too expensive. It's down 30% per year. They're expecting 15% growth. Earnings per share this year increased by 58%, so 15 next year, and the next 5 years, 8%. So they're kind of slowing their growth, so they couldn't justify the $369 52-week high. That's essentially what's happening. It doesn't have a dividend. October 18th, looks like on October, 3 firms reaffirmed. They moved one. Jefferies moved it to hold with a 210 price target. Mizuho neutral with a 215. Barclays outweight with a 235. You're trading at 262, so they are expecting this to go down a fairly good amount. So I don't know that you necessarily want to get out of this one because I do think, in my mind, I think this one goes back to 300. I think it covers this gap in this run, and that gap right back here that came in June from 277 to 295. I think you could cover that gap in this current run. I don't think that's out of the question. And that comes from their April earnings where they just went down. Again, you're over that 200 day. If we move this to a daily and you were to look at this one, there'd be no way you'd get out of this one because you've just crossed the 200 day. You had that golden cross. Well, you haven't had the golden cross. The golden cross really is the 50 day over the 200 day. And the gap here from their previous earnings is from 276 all the way up to 293. So I think you've got 290 in this run. So I'd probably look to get out of ISRG at 290 if you're looking at some losses. I think 290 would be a good one to look at for that one. And that's short term. Again, read up on the stock, understand the actual business. If you're a believer in that business, it sounds like some of the analysts are really just saying, hey, this is a stock that may have run its course. The PE isn't justifying it. So read up on it. I would love to do more research on it for you. I don't personally own it. I think you can do that research. Go to FinViz and just look it up. Read some of the articles on it. Understand that. If you have any questions, please just email me back. I always have time for you guys. Always. I think I get to everybody's email. I do have one email, I think Brent, that I've got to reply in my box, and I promise I will. But let's look at her other one, Penn National Gaming. This is Portnoy. I think Portnoy is incredibly entertaining. As a stock guy, no way. He never had it as a stock guy. And he's a guy who is a sports bettor who moved to stocks. And I think he's playing his stocks the same way he plays his bets. Is just, hey, I'm going to, hope and pray. I would hope that we'd have better luck than hope and pray. But Penn is kind of the same situation. The charts look super similar to intuitive surgical, I should say. This one, you had a cross up here at $30.22. You're only at 36 though. I think this one, let me pull this back. This one went through quite a fall. Yeah. Back in November of last year, we were all the way up near 72. So you've kind of been cut in half. Here are my thoughts on Penn. And I've made the same mistake and do as I say, not as I do. But Penn's PE is 26. It's not super expensive. They're making money. When Macau opens, I think these guys, every gambling stock will go up. I don't think there's anything to think that these stocks won't go up. As you get closer to the Super Bowl, I think these stocks go up. Penn has some gaming contracts. They're down 30% year to date. October 6th, Canaccord Genuity had a $50 price target on it. Look at some of those most recent articles on Penn. In my mind, from a chart perspective, just because it's gone through so much of a downturn, I think you've put in kind of some support here at $40. So it doesn't have support right now for $40. It looks like it's crossing over. The MACD's at 58. I think 36 might be a good time to get out. You've got some gaps down here at 32. This is, again, short-term look. Because if I look at my personal holdings, and again, you did the same thing that I did. Look at DraftKings. I talked about this with somebody else. I'd be getting out of DraftKings right now because you got this big gap down here between 11 and 12. Look at that cross up right there. I should be out. Again, do as I say, not as I do. Of the two, if I had to stay in one and get out of the other, I'd get out of Penn because you're significantly down on Penn. Take those losses. I'd throw it into something else. Honest to God, I'd probably throw it into Google just because Google in my mind is the best bet that you have out there, but it's long term. If you want to go a little more diversified, buy VOO. It's a Vanguard S&P 500 ETF. The Vanguard, the SPY is up near 4,000. I think you could probably wait till it goes down. Again, have some patience. You want to buy on down days. You don't want to buy on up days. But there's my thought for you. I think hopefully that covers it. I would probably get out of Penn, stay in ISRG, just because I think ISRG probably has some hope. But I would, as that gap gets filled in ISRG, I think I'd sell that one up there. You're down less on that one. I think you could do that one. Cooper had written to me last week, and I forgot to bring this up. It was in my notes. He just found my podcast, listening every day, love what I do. He's buy and hold guy, but I use your advice to find good entry points and dollar cost average down. Wondering if you'd take a look at ZoomInfo Technologies. This is not Zoom video. This is not the conference call thing. This is ZI. ZoomInfo Technologies. I don't even know what they do, but holy wow. I wish I would have gotten to you last week because it looks like you, on your way back up, there was a big day on November 16th. Look at that volume spike. Let's take a look. The algorithm has you out as of last week. It doesn't have you in. There is no reason to get in on this one. It looks like it's still doesn't have any support whatsoever. So I wouldn't get into this one. But if you're in it, let's take a look. The PE is 118. Too high. That's why it's 60% down. October 5th, Morgan Stanley resumed coverage, said the price target is $66. Holy F. but they did plunge on disappointing earnings. So take a look at those earnings. Sounds like they're not doing very well. They provide go-to-market intelligence and engagement platform for sales and marketing teams. Company's cloud-based platform. Clouds just sucked. I mean, clouds have just done horribly. But I would worry about that PE at 118. This year, they're growing by 372%. Next year's earnings, 18%. So I think you're going to continue to see some downside. Morgan Stanley might know something that I don't. You look at Daiwa Securities in September. They put out a $66 price target. You look at the February, these guys have all 70 and stuff like that. I don't know enough about it. My guess is that you're probably looking at more downside just based on that big red PE number. I don't know when you get back to 66, but these monkeys sometimes throw out numbers and they don't mean anything. They're just, hey, we think they could go up to here because they're going to grow more. I don't know. You're 66% down from your 52-week high. They have a $66 price target. The 52-week high is 79. Your 52-week low is 23. You're trading at 26. I don't think you're going back down to 23. You're 14% from there. But could you go back down to 24? Possibly. So find out a little bit more about it, Cooper. But right now, the algorithm has you completely out of it. And that's as of November 18th. So that was as of Thursday. That MACD is down. The RSI is down at 31. You're probably coming to a buy. If you do, I'll give you this advice. If you come up with a good reason, and when I say good reason, a financial reason, a growth story, that they should be over $30. You've got a gap here between 28 and 30. You've got another gap here between 34 and 43. Those are both since the last earnings call. My guess is that their guidance was super weak because their earnings look okay. You had 21 cents per share in the previous quarter in August, 24 cents per share right now. That's a fairly big move, but their guidance probably came down. And so that PE is what's going to kill them. But I like the question, like the stock. The Netflix documentary, I like the stock. We did get, and I think this was Jesse's suggestion, and I did a little, and I put in an alert for it because I did like it. Hershey's, HSY. We got a buy on Friday, 224.61. It's 224.67, but it came in a little early on the text that came to me. This one's not bad. It's close to its 52-week high, so I do have to point this out. It does have a fairly high PE at 34. They're 16% up year to date. Their 52-week high is 241, so you're only 6% below your 52-week high. If you like chocolate, I mean, might be a good buy if you like the chocolate. I don't see any volume shelves that are going to point out that we've got, huge downside. I don't see anything that tells me that this is anything other than, hey, they're going to continue to grow their business. Look at the earnings per share, 210. Then it went to 169. Kind of dipped down, but they said, oh, we're going to make more money. Oh, 253. Great price. 180. Hey, we didn't do that well. 217 here in November. The January one, if we go back to, that's the 169. Look at what it did last year. I mean, you had this big downturn, but 224, I think you could be going back up to 238, 240. So you might have 10% run in this one, but it looks like it's a good cross up. Again, if I were to pull this volume shelf back here to say January, where we were kind of there, you can see that there's a pretty good volume shelf posing here. I'm going to bring this back so you can see the volume shelf. See it right here, 221 to 226. It's kind of where that volume shelf is. So you've got some support there. I do like it. Again, my only fear is that you're buying a high PE at its 52-week high. But I do like, I got the thing. Now, if we go to our Twitter, I posted this on all of my socials because TrendSpider did a Golden Cross, and I'm going to go to my profile to look it up. And I'm sorry, I'm going to go through quite a bit because I think I posted a bunch this morning. There's SBF, by the way. Bob Iviger. John W. Rich is saying he's on Grindr. Kudos to you. Where is TrendSpider? There they are. Jim Cramer. Oh, yeah. That's over. There's my note. There's my note that I put. Here it is. So, Netflix, the last Golden Cross Netflix saw, the stock ran 35%. That was the last one that it saw. Now, let me see. There was a tweet. Yeah, here. Why do we use 65-minute chart? There was a tweet. Oh, here we go. Do Golden Crosses really work? Let's find out. Using TrendSpider's testing strategy, we created a strategy to long SPY on a 50-200 SMA cross-up. That's the traditional one. 50, when the 50 crosses up the 200 day and exits 30 candles later. 30 candles later. So they're doing a daily. So they just, I think it's daily, yeah. Over the last 28 years, the strategy has an 83% win rate and an average return of 3.59%. Doesn't sound like a lot, but that's over 28 years. Crazy, crazy good. And again, TrendSpider can let you, do those types of strategies. You can trade on those. You can do all of that. So let's take a look at their Netflix Golden Cross. So if I go here and then I go to this is just a TrendSpider chart. No different than what you guys see if I share it out there. But you can see these gaps here. It's kind of gapping up to 300. Could it go and fill that gap? This is a daily candle chart. So 184.35%, 68 bars, 3 months, 6 days. I don't know what the strategy is. But let's go back and let's look at Netflix in my algorithm and see that Golden Cross that they're talking about. Because Zephan wanted me to look at Netflix anyway. And we've got this huge gap, by the way, in the chart. And this was from their earnings call in January. No, I'm sorry, it was April, where they dropped all the way from 350 down to 248. You are in this one at 287.58. You're trading right about there right now. But if you do have this Golden Cross, right here, that blue line crossing the 200 is the Golden Cross. And so you can see the algorithm has gotten you in and out. But if you were just doing it on a Golden Cross, buy it here. So far, you're doing pretty well because right there, you would have bought at 228 and you're at 287 right now. So I do think that there's something to this. That I think you're above the 200 day on this one. You've got this gap kind of within range of 350. But again, if we go over to FinViz and we look at Netflix PE is 27. And they're expected to grow this year 81%, next year 1%. Their ad tier is actually performing fairly well. So I think in their next earnings, which is coming up January 20th, I think you could see some really positive things. And I think you're going to see some device sales that get people back into Netflix. I think you might see a gift certificate type thing back into Netflix. So I do think that 350, you could go in there. I like it. I like it a lot. Let me delete this. Remove. Actually, let's see. Hide user on this channel. There we go. I had to remove a bot from YouTube. So I like Netflix. I think you could, I might buy some here. We went over CHRD. One big thing. So I think I'm getting more popular. But I got an email from an agent asking me to have a guest on the podcast. If you guys want me to have guests, I'm going to put a poll. Write to me. Just put it in the Facebook group. Put it in a a Twitter thing. I may put a Twitter poll up to run for like the next month or so. Write to me on Instagram. He's a financial planner. He's got some clout. Wants to come on as a guest. I probably wouldn't necessarily. I may chat with him live on YouTube, doing that type of live thing. I'd have to figure that out though, technically. And you guys know how lazy I am. But if you're interested, let me know. I haven't responded to his agent. I might like it though. From a financial planner standpoint, if you're interested, hook him up and tell me that you want to. But if you guys don't want to hear that and you just want to hear about stocks, that's fine too. This week's weekly stock pick. If you're not subscribed to his newsletter, you should look him up on my Twitter, because I share a lot of his stuff, and I also share a lot of his stuff on Instagram as well. But his weekly stock pick is Merck, and Merck has been an absolute killer in my algorithm. September 22nd, we got a buy-in at $87.83. Today, you're trading at $104. It's been on just this run, and it's got all the confirmation in the world trading outside the Bollinger Bands. So it again, I can't tell you enough. That golden cross happened on October 24th, and you've continued going. Now, you do have a gap here between 87 and 89, but that's below the 200-day. So right now, you don't have to worry about it. But my weekly stock pick is Merck. It is Thanksgiving week. It's light. I don't know that you necessarily, get into this one. But, at 104, I think you've got 110 probably in your sights. It is an expensive stock. This is part of the price that you pay for a well-run company. The PE's at 17, but they are just steady. They're growing 173% this year, 2% next year. Their 52-week high is 104.60, so you're right at the 52-week high. But that's his stock pick. He's got an algorithm that he does super, super successful. So let's look at Tesla. Tesla's an interesting one. I saw one of the traders of Tesla posted, "Hey, Elon's just killing us. All of his Twitter stuff is killing the Tesla stock." That's true. I mean, we've pointed it out. The gap between 138 and 140 is probably in line. If we go back to this daily, I think we'll still be able to see it if I start pulling it back fairly a good amount. Yeah, we still see it. See, I'm sorry, it's between 139 and 146. I think when you get to the 140 handle, this is a daily. You have no confirmation to buy this at all right now. Nothing. Their earnings are coming up on January 24th. There's no, you're going to have, I think it's January 1st, he's going to, release the quarterly sales of Tesla. It's down 2% at 175. I think if you want to start adding to your position, you could. The problem with Tesla, same thing as everything else that I've kind of gone over. It's the PE. The PE's at 55. This used to be at 200. They started making money. They're expected to grow 669% this year. They're expected to grow 37% next year, 5-year 48%. If you start growing at more like the 669, that's where this stock starts flying. But as they become a larger company, it gets harder. They're 55% below their 52-week high. They are only 2% above their 52-week low, but their 52-week low is at 176. So you're hitting 52-week lows right now. It's a super volatile stock. It's down 48% year to date. There's no dividend. Forward PE is 31. It's expensive, but this is a main driver of the S&P. So let's look at Earnings Whisper. Do I have Earnings Whisper up? No, I don't. Let's see. Earnings whispers. Because there are a couple. We'll go to the calendar after market close. Zoom Video reports today. That was the one that I wanted to look at. So let's look at Zoom Video. I think my dad asked me about this one. Their problem is that they're just a video chat program and nobody's paying for them. So you're seeing them kind of, I would say since you're on this low end, you're probably covering this gap between 72 and 76 today. I just can't imagine that they're going to announce, oh my God, we've got this killer app and everybody's subscribing to it. I just don't see anything. But if you want to see more about why you should invest in Zoom and gamble, their PE is 25. Their forward PE is 22. If they announce that they're making a lot more money, great. But, look at some of the articles on this one. But Zoom is reporting today. Dell is also reporting. We've seen a slowdown in PCs. Let's take a look at tomorrow. Is anybody doing anything tomorrow? Dollar Tree and Best Buy. These four, actually, the four top ones before the bell tomorrow. DLTR. I like this one. And when we look at the chart, you might see why I like it. But it's filled this gap on the way up. And honestly, we should have bought here at 141, knowing that it was going to fill this gap. But the gap's still above the 200-day. So I think your bottom support level is 154. I can't imagine that it goes below 154. So taking the 52-week route, I think you've built this support level here between 154 and 171. I think if they announce, hey, we're going into a recession and people are buying down and people are coming to Dollar Tree, I think that's a good thing. I think that's where, let's look at DTR. Dollar Tree. There we go. DLTR. Their PE is 23. Forward PE is 19. They don't have a dividend. They're up 16% this year. They're 7% below their 52-week high. But if they come out with some crazy earnings, that 52-week high could get broken. If they even, guide, the same. So Dollar Tree is one. Best Buy. I'm not as bullish on Best Buy just because I think you've still got some supply chain issues. I think the consumer is slowing down. You have broken that. You had broken that 200-day, but it's clearly using this as a resistance level at 71. Do I think you're going to 90? No. Do I think they're going to say, hey, we've got an Amazon killer. We're going to sell more TVs this year than Amazon? No. So I'd probably stay out of that one. Dick's Sporting Goods. This is an interesting one because they just came out with a price guarantee. And if you're a shopper for clothes, if you're a shopper for anything, Dick's has been a pretty good spot to go to. They are a little bit more expensive, but with that price guarantee, is that going to bring in more people? They've had some really good earnings, 364, 285, and you saw that drop down there when you got to 285. Then all of a sudden you get 368 in this crazy one. The algorithm loses you 27%. Buying and holding this one makes you 81%. The average win in my algorithm is 10%. And ironically, you just got into this one on Friday at 109.16 and you're trading at 107. So it's kind of ironic that the earnings are coming up and it's crossing up right before earnings. That might be a good one to put in. Baidu is a China stock. And China's an interesting one because at some point China opens and you're going to see these stocks soar. These stocks have been beaten down and it's going to soar. I don't know when that is. Government manipulates it all the time. But you have an algorithm that bought you in at 77.50 and boom, it's soaring up here. You've got gaps at 112 to 113, at 122 to 126. But you have those same gaps up there in BABA. So this could be a one to watch today because tomorrow before the bell, if this one, it has lost some of its confirmation on the 9-day, but I think if we close at about 91 I think you could feel comfortable looking at that one because that would kind of put it right at the top of this gap. But if they come out with some good earnings, my guess is this gap up here at 111 looks a little bit better. So Baidu is of the three earners that we looked at before the bell tomorrow. I would say Baidu, or the four, I would say Baidu is probably the most interesting. And when I say interesting, I think it could move either way, but I think that one could move the most. Let's go over some scans because there are a couple. UNH, United Healthcare. You guys know I say United Healthcare should be in your portfolio, but I think it should be in your portfolio when it's under 500. The buy-in is at 530. It's trading at 526. Doesn't have a whole hell of a lot of confirmation on the move up. The RSI is in no man's land at 49. You did have that cross up there. The 9 days moving a pretty good amount. It's probably going to cross up on this 21 day. The golden cross happened here on October 28th. And you see the golden cross just didn't work. It's kind of just come down. But it's going to probably capitulate here. I'd say, again, 500 to 550 is probably a pretty good trading range. And the reason that is, even though you had a cross up, look at the PE, you're at 25. I mean, this is just one that gives back year to date. You're up 5%. You have a 1.2% dividend. Your 52-week high is 558, so you're only 5% below that. But your 52-week low is 436. You're 21% above that. So it does trade within this range between 450 and 550. I think for the ongoing year, you'll probably see that happen too, unless there's some type of changes. Verizon. I've talked about Verizon before. I have Visible. If you want to sign up for Visible, the link is in the description with the link tree. I think I get $20. You get $20 off. I have that service. I was at Mercedes-Benz Stadium yesterday. The Wi-Fi sucked. But you know what didn't? The 5G. And I'm paying $25 a month. You know, the guy sitting next to me, $110 a month for his Verizon service with all the taxes and stuff. I think it's the $90 plan. He got slower speeds than me, and I pay $25 on the same network. There's no reason for you to overspend on your phone service. I'll start my podcast on fire. Financial independence, retire early. But saving what, $75 a month? Let's see. What's 75 times 12?
The answer is $900.
$900 a year. $900 a year. So you're going to make $100, $900. You're going to make about $100 a year probably on profit on aggressive investments. Boom. 20 years from now, you got more money in your pocket. So Verizon, you had this cross up here at $35.91. This is a secondary cross up at $38. That $35.91, great buy. You're under this 200-day, the 50 days starting to move positively. I think you could look at this one. They're spending a lot of money. That's the problem with Verizon. It's a race to the bottom in the cell phone world, but Verizon's actually doing fairly well in holding off T-Mobile. T-Mobile has just been having everybody's lunch in the cell phone world. Host Hotels crossed up. It's a secondary cross up because we crossed up here at 1843. You're at 1834 right now. You can see we're just kind of capitulating. You're using the 50-day as your support. It golden crossed up here, and that's probably why it got the MACD cross up. It crossed up here at about 17. But I think you could easily run this one up to about the $19.50, $19.20 or $20 level. So you can see the Bollinger Bands coming. You don't have full confirmation. Well, I guess you do this morning. You do have full confirmation. But this was a cross up. Thought I'd report it. Got some good volume shelves up here. Travel is in. That's it. Let me look at, can you take a look at SHLS again? Let's look at SHLS. This comes from Jackson on, this is Shoals Technology. This one had another, yeah. See, this one at 2286, see that gap where it gapped up on earnings? I think I may have said something on this cross up here because it came up on the energy Or was it? Let me see. No, it's not energy. It's technology. So it must have been on like a NASDAQ or something like that, or the ARK fund. Look at the upgrade November 15th to a $30 price target. You're trading at 32. It's still got confirmation above the 9-day. It's come back within the Bollinger Bands, but this is a crazy run. The RSI is at 76. Crazy one. Crazy. If you're in this one, kudos, because you bought at 20. If you bought at 22 on my suggestion, you better freaking tip me. Kidding. But the RSI is all the way up there at 76. I wouldn't get into this one, even if it runs from 32 up to 60. I just probably wouldn't chance it. No reason to waste your good hard-earned money. If you want to put $100 into it, go and put $100 into it. It's not going to zero. The biggest drop you're going to see is down here to 22. So I think if you hit the 25 level, if you're buying here at 30 and you get to 25, sell out, because at the 25 you're going down to 22. Simple as that. Or buy puts. Just buy puts when you start to see this button hook commit, because that run is just crazy. Brandon wants me to look at GME. I will do this just for you, Brandon. Brittany, bitch. GME. Nothing's going to happen. I think, what was it? On TrendSpider, I saw Ryan Cohen is trending. Let's look. Why is he trending? Became a meme stock king. He also likes Apple and Netflix. So I admire the individual investors. Has joined GME for his first extended interview. Yeah, he's trending. He's trending because he did an interview. But GME, it's go into a GameStop. They're not doing anything. There's no reason to be in GameStop. They're not making money. They're losing money. I tell my cousin this all the time. $12 to $10. It's $27. This was a stock that I almost bought at 15 when they had their earnings in December of 2020. I said, you know what? I think for some reason, GameStop is going to, pump on this one. And I didn't do it. And I think it went all the way up to $400 at that point within a couple of days. But the algorithm, ironically, here's the thing. The algorithm makes you 2,704% over 1,000 candles. The actual stock makes you 687% by just buying and holding. You had 26 positions. You win 42% of the time. Your average win is 67%. Again, this is not making any money. This makes no sense to put your money into. Watch the Netflix documentary and then tell me that those guys understand stocks. I like the stock. Listen to that stuff. But, okay, 54 minutes. No podcast tomorrow. Let me know if you want me to have guests on. Get ready for more partnership with TrendSpider. They upped my partnership. They seem to like what I'm doing. Thank you to everyone who subscribed, because I think quite a lot of you actually subscribed. So thank you to you guys. The other thing that I want to tell you is, if you did subscribe to TrendSpider and it's overwhelming, that is understood. Let me be your guide. I will guide you through it. If you need any help with it, let me know. Once you set up my algorithm, you understand moving averages, things of that sort, I'll probably be putting together that that guide that I told you about, where I'm going to charge you like, $15, $20 probably. But I'll guide you on how to understand charting, how to understand moving averages, where to go to do it. When I mentor people, it's a 4-session program that I typically do. Usually by session 2, people understand exactly what these charts, what the candles mean, what the moving averages mean, how to use RSI, how to use Bollinger Bands, how to use stochastics. What the hell is the MACD? What's the movement like? And then you have to just get used to the stocks. So I'll probably put that together and give you some YouTube links on how to watch. everybody who's watched all the YouTube stuff where I learned, they're like, oh my God, it's awesome. But I'll put that together for you. I'll charge a minimal amount. But if you're overwhelmed with TrendSpider, like quite a few people I think had mentioned to me, it's a lot of information, but it will be helpful. It's just not a plug and play style platform. With my algorithm, you can plug and play if you just want to use my strategy. My goal would be you develop your own strategy where you're comfortable. So I know I can share my market scanner, so I can share that one with you if you're interested too. So hit me up in the socials with your requests. Let's look at one more because you do bring up a good point, Jesse. Sedge, Solar Edge Technologies. Still got confirmation, man, at 304. I'm telling you, 200, buy it. 300, sell it. But it's got that confirmation. It's above the 200 days, so this gap is less relevant to me at 250 to 262. But that MACD is up there. It's kind of button hooking. I'd probably look to sell it over 300 and see if this 270, takes some off the table. Doesn't mean it's not going to 330, but don't be greedy if you bought into it. So Ethereum's crashing. GBTC is crashing. More crypto news. Sam Bankman-Fried, biggest douche in the world. He said people are throwing money at him to support his new endeavor. Why would you throw money at this kid? No, I'm obviously out of the know. Devon's down 5%. Your energy's just getting torn up, but it's touching that 200 day. Yeah, I'm down probably a good amount today. So if you have any questions, hit me up in the socials. Thank you. Okay, export song to disk. Podcast, desktop, export. Bum, 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 bum. God, I'm getting torn up. Ethereum down 12%. What moron would hold on through all this? I think I bought up here. Yeah, Zephan, I'll hit you on. I'm gonna be driving tomorrow, so for some reason, Zephan too, I need to check TrendSpider because for some reason it tells me that you canceled, Zephan, when I looked in my my thing, but let me see. Log in here. What the hell is that noise? Let me see. Menu referrals. Yeah, I think Zephan because so I just got to text them. I got to text Braden from TrendSpider because I don't see your new one on there. But I know you got it. Yeah, your email was incorrect, I remember. That's why I looked at it, and that's why I know they canceled it, and then they just got to put my code in there. You did it right, though. I think they may have done it wrong. Whoever did it. But they did tell me, and if you guys are listening, if you signed up for TrendSpider, I'm going to create a market scanner that I hope add parameter here. Let me see. Yeah. I'm going to do a market scanner. I'm going to create a market scanner for everybody. so that it's plug and play. And they told me, no, remove this condition. They told me if I share it, it's awesome. And by the way, Dan, the CEO of TrendSpider, has promised that the app, they do have an app, which is fairly useless. And I don't like it. But Dan has said, hey, the app is going through some revisions. So, here, by the way, Boyle on a 5-minute chart. Look at that. It's still got confirmation, even though it's trading at not just above the 9-day there. But boy, yeah, exactly. It's a week free. And here's Brandon, I think there were 2 people over the weekend that were just like, oh my God, it's mind blowing the amount of information. And one of the things I was talking to TrendSpider about, my expertise is I worked at a dial internet company from 2009 until 2020. Who had dial-up internet from 2009 to 2020? So one of the issues that they saw that TrendSpider was seeing is that as people have gone back to work, as they have left their homes, they have less time to do more of the stock stuff. So they were seeing some churn from people who just kind of let their subscriptions lapse and kind of said, hey, I just don't find the value in it. One of the goals for me is that if you guys think that, let's come up with a strategy where it's, simple. Instant Messenger. Well, Instant Messenger was different because the problem with AIM Instant Messenger wasn't that the Messenger didn't work. The Messenger worked great. They tied it to fucking dial-up service. And then when they opened it up, they said, hey, the real benefit we have is AIM Instant Messenger because everybody uses our contacts. So let's use that to tie it to the service. Well, nobody fucking wanted, AIM services and stuff. Why is this doing this? Okay, hold on. I have got to... okay, hold on.
Good morning. It is Monday, November 21st.
Quit music. Okay. There we go. GarageBand, quit GarageBand. Save. Okay. I don't know why this one is up here. No, I haven't seen Stacker. But what I was telling you guys about retention, what we found at the dial-up internet company is if you reached out to customers, they tended to cancel. And I know TrendSpider does a fantastic job of actually keeping you informed, reaching out to you, trying to keep you engaged with the platform. There's probably some strategies around that to the point where they can tell what you're doing. And if there's artificial intelligence out there that can tell them, hey, this person may be setting up something that they don't completely understand. Let's offer them some help. And so what I'd like to do when you guys actually do this is work with TrendSpider in identifying, hey, this person needs some help. Let's proactively reach out to them and see if they have help. Or if one of my subscribers isn't necessarily using it, alert me so that I can reach out to them and say, hey, I understand that you haven't been using it. Is it there's something that I can do to help? Did you not set up something right? Let's go over your setup. So I really want to remember, my goal is not to make money necessarily. I do make some money off of TrendSpider. My goal is to get you guys a strategy that works, an opportunity to make money, and to, get this community up and going so that we're all kind of, alerting people. Like Jesse, man, you told me to look at Sedge. I completely forgot, I forgot about Sedge. And I forgot about it when it was $200 too. So, okay, I'm on that. Let me go over to Anchor. Oh, and have I told you I'm going to be driving tomorrow? I'm probably leaving tonight. In fact, I'm not going to stay on here till 11 o'clock. I might get my day going because I'm going to pack and go. Boom. Insert ad. Let's see I don't know what Stacker is, Brittany. Biatch. I'm going to put in Peacoat just because I know Peacoat. And then we're going to go to notes. And I'll open up another Anchor because... Oh, you know what I have to do? I have to get the new... Linktree. I have to get my new... login. Excuse me while you guys talk amongst yourself. Be patient, man. Patience. Let me see. I've got 80 referrals. Let's see. Oh, let's see. I'm going to do this. Copy. And then create. Netflix. I think Brandon actually texted me that Brittany actually walked in on one time as I was saying Brittany bitch on the on YouTube, and he had the volume up, and she did a double take. Hey guys, hit the thumbs up button, by the way. It helps. It really does help for some reason. I got to get to 1,000 subscribers on YouTube. And I'm going to do some additional content where I just go over the charts and then post it as a short or something of that sort. Okay. We're going to... TrendSpider's Black Friday sale. And boom. Okay, and then we're going to put the support link. Oh, I don't want all that.
love that I've got international listeners too. Let's see. I'm gonna put Q&A. This question was automatically added. Add a poll. Only available on Spotify. Yes. No. And we're going to stop it. Nobody's going to freaking vote. Nobody puts in any questions. Okay, and we're going to come over here. And I'm going to copy all of this. And we're going to put this down here. I'll take these out. We're going to take this out. Q1 show. That's awesome. I gotta go look at your Twitter profile. HSY, we're gonna put that in. Disney, Netflix, Golden Cross. I didn't talk about LMGO either. Tesla, Netflix, energy. We're going to put these in. Oh, I should put it. That's hilarious, man. By the way, get ready for a less candid, a less time. I'm going up to spend the time with my parents, and for some of you long-term folks, you may know Boyle and TQQQ. Did I put SPY in? Let's put in SPY. I know. AEO, man. What is it up now? It's 13:02. Let me finish this episode. And then I'll get back. Upload new episode art. By the way, if you're listening on Apple Podcasts, some reason the artwork looks horrible on Apple Podcasts, but on Spotify it looks fantastic. Okay, we're going to take a look at SPY. We're going to take a look at oil, by the way, is getting killed. ZI. HSY. Netflix. And Merck. And Tesla. I have that one. And then we're going to take these. And we're going to tweet this out. Then we're going to take this. Tweet this. LNG. Goldman Sachs. And then where is my... Oh, let's go to Earnings Whisper. Pete Davidson, man. I made a comment yesterday about Pete Davidson with Taco Bell. Guy's high as fuck, and he's promoting Taco Bell. Zoom, Dell. I went over Dell. What is Dell's symbol? DELL. And then we went over aftermarket close tomorrow. DLTR, BBY. By the way, Ricky loves freaking Best Buy. I know that. Way back in the day. DKS Baidu. Baidu. And then after HPQ, that's an interesting one. Ooh, Deer reports on Wednesday. Let's put that one in. I'm going to look at that one real quick. No, I don't want that. DE. Let's move this over and we'll say SOXL, SOXS, BBD, AMD, Amazon, QQQ, PBR, Neo, NVIDIA, open. I need 3. 1, 2. 3. Tweet. Show. I should have blocked that one though. How am I not following John W. Rich? How am I not following him? Not following Yeezy, by the way. Tom's giving me his reasons why Cord wasn't a good recommendation, but No energy this week is a good recommendation. I should have blocked that freaking comment, Zephyr. Now I gotta look down and... You know what? Here. We're going to remove, so I don't have to watch it. I removed it. I have the power. Okay, what was I going to look at? AEO. You guys have been looking at Boyle. Why don't I have the chat window up here for some reason? I do, but it's slow here. What was I going to look at? I don't know. AEO. Okay, you guys got me for 7 more minutes. Goldman cuts oil forecast by $10 to $100 a barrel. Fucking Goldman. It hasn't even hit $100 a barrel. It's got to hit $100 a barrel. By the way, I do agree with Tom. Oh, yeah, Netflix. Netflix was what I was going to look at. So, let's look at it real quick. I'm going to run the algo on it. Look at the button hook. So, Zevin, see, the algorithm has you in at 287. You're trading at 285 right now. I would wait for the afternoon candle. I think if the morning's candle... Shit, I wish you had my algorithm in TrendSpider. But I'm not taking an hour to set it up with you. See how last time here with the button hook, we got out with 11% gain, but it started to close that gap and it hasn't closed that gap. The gap is down here at 244. But you might just be trying to time it. I would say if you hit 280 today, let's switch back over to Active Trader Pro. This is where I switch back and forth because I want to look at the short term. See, you have no real confirmation right now. There's nothing here. See how it's below that 9-day, below the 21-day. The pink line is what's called VWAP, volume weighted average price. That's at 288 right now. You're trading at 285. That gap starts at 251. And I'm going to look to see. There's a volume shelf at 275. So I think if you break 280 today, I think that would be where I would put some money in. And I would buy again, if you're buying, say you're buying 100 shares. I would say buy 10 shares. It's because it's a holiday week. You got to be kind of careful about this one. Holiday weeks, you just don't have great action during holiday week or great guidance. And Netflix is going down because Bob Iger is back at Disney, and they assume that Disney is going to have some brilliant strategy for streaming, going forward. That for some reason, Chapek just wasn't a good CEO. I don't think that's the truth. I think you buy Netflix on weakness because I do think that when they come out in January, you're going to see some positive stuff. If we go back, now my dog's crying. You guys might only have me for a couple of minutes. Come here, Daisy. Are you okay? Let's go over to, let's look at Netflix. Let's look at the most recent. I love you. See, November 15th. They got 370. So I think if you break 380 today, you're at 384. And it's at the bottom of the Bollinger Band here in Active Trader Pro. I think if you break,
I hate giving a price target because I'm just not sure exactly. I love you. I know. I know. Are you okay? You didn't realize I was in here? Oh, you didn't realize I was in here. I hate giving price targets because here's the thing. You've got Thursday off. I think you have a half day Friday where nobody's going to trade. So your action is just muted. I think I would, yeah. I mean, honestly, if you want to put, money into it, put money into it right now. But I'd be a little bit more patient. You can't time it, but I think if it touches under 280, I think you get it. If you start getting confirmation above during the day, and say you only hit like 282, and then it starts trading above these moving averages during the day, your 9-day and your 21 on these daily charts, where you're just looking at like a 5-minute chart. I think then you say, okay, I'm just going to put in, if I want 100 shares, I'm going to buy 10. Oh, by the way, that's my neighbor. Hold on one second. Hi. Are you working? No. Why, what's up? Uh-huh. I'll find him. Okay. I'm waving to you too. That's because I'm live on YouTube now doing stocks, so you'll laugh at this one. The last time I answered a phone call, it was my friend talking about a green card, and then I came back and all the listeners that were listening to me are like, green cards? Who's illegal in your house? Hi, Kevin. I'll find Putty. What? Oh, really? How intense is that? Let's just say I get yelled at if I'm too loud in my house. Well, but yeah, every day. I will. And nobody is anybody in the house, or I'll just knock before I go in. Okay. And I am driving to probably I'm leaving at like 10 o'clock tonight. So if somebody sees my garbage cans out tomorrow, if they can just pull them back in, I'll probably tell Russ and Mike too. Okay. Then tell Kevin one of his chores is tomorrow after the trash is in, he just pulls my stuff to the side. I know. Okay. Okay. Good deal. I'll look for Putty. I'll look for him. After Christmas. Yeah. Yeah, I'm working the Miss America pageant too, so yeah, I did it last year. It's fun. But yeah. Huh? Just handing out the badges that I do. When you go to like sporting events and stuff, there's like behind credentials to get behind like the scenes and stuff and security. I just do that. I just do that for them. So their production team. Yeah. Uh huh. Yeah. Well, if he's going up there, tell him just to stop the credential booth and ask for Gary. Yeah.
I love the event. I mean, I really do. I love the people, and they're really good. I'm just, I enjoy working it. So they asked me to come back. I know. And I got a COVID test last year with all the contestants, so I got to hang out with them a bunch. So, but I think this year might be the last one. So I don't know. I'll find out more. I thought I saw your cat on the porch. Okay. I'll tell him if he's in the house or something and hears the doorbell. But it might just be me letting Putty in. But I'll look for him and I won't barge into the house at all. Oh, okay. Okay. Talk to you later. All right, everything's fine. Okay, bye. Okay. I like how you guys carry on the conversation while I'm on the phone. No, my neighbors love me, man. I am neighbor of the year. I will literally, if I notice that your grass hasn't been cut, I'll go and cut your fucking grass. Yeah, see Zephin, see it here. Now it's 10:33. I gotta go and get my day cut. Canograph. Oh, this one's getting killed. What happened here? Let's go back over to Safari. Couple of downgrades. Oh, it's still plummeting. Let's look at Cano. I thought this was being bought and then they didn't buy it or something. They pulled out of the deal. You do have a gap up here, but see, I wouldn't touch this one because look at how far down below the 9-day. The Bollinger Bands they're expanding, which means you're still going to have room to move down. I wouldn't touch this one. SQQQ is the only. Look at this. I just looked at Active Trader Pro. Look at the right hand side. This is the most actives. The only ones that are green is SQQQ, DLO, which is the one where that's a short. There was a short taken by Muddy Waters on DLO, and Bank of America's up 2 cents. Yeah, see, here's the problem, Jesse. I just don't trust shorting. Puts is the way to go if you want to do if you want to short, but I don't do options, so I get crazy scared of options for some reason. Don't ask me why. It makes no sense. But I mean, look at Cano. Look at that chart, and you can set up in TrendSpider. You just go over here to Market Scanner. Let's see. Let's look at short-term broadening. This scanner does not belong to you. So it's looking at fractional trends. Let's scan. We're looking at the S&P 500 index. Jesus, look at all these stocks. I got a list. Cigna Corporation, CDNS, Cadence Design, ADP. It looks like it's fractional trends. I don't know what this scans for, but Jesus, look at that triangle right there. This is on a daily. That's Dollar General. DTR is probably the same thing. Look at PayPal, down 3% today. Dish Corporation, down 2%. Let's see if there's any big movers in the S&P. Let's go over to home. Let's look at the heat map. Look at what's getting killed. Energy, Tesla, Apple. Qualcomm's down 2%. PayPal's down 2%. Look at the consumer cyclical and resorts. Yeah, there are some great Fidelity videos on options. I just haven't. Look at what's going. I mean, look at beverages. Remember I said Coke? Where did I move Coke at? Let's do Coke. Let's go to strategy tester. We'll look at our algorithm on Coke. Remember I said buy Coke at 55, I think it was? Yeah, 55.23. Look at that move. And you still got confirmation on this fucker. You're all the way up here at 60. You're probably going back up to 65. All I know about options is puts is short, calls are long. If you sell calls, you can, that means you think it's going down. If you sell puts, that means you think it's going up. If you buy either one of them, you think it's going in the same direction. So, but you can sell calls or sell puts without actually owning the stock. You have to just buy it at the end of it. Or you can just, sell it, whatever. But Oxy's down 5%. This oil's just all on China and demand and stuff. So, okay. I am out. I'm driving tomorrow. Remember, hit the thumbs up. Thanks you guys for watching. I appreciate it. I will talk to you